Thank you very much. And hello again. You didn't get rid of me that quickly. So it is a pleasure for me to again address you now at the start of the PRI in person. And we are absolutely thrilled that so many people joined us at this event here in Singapore. It's sometimes said that it's hard to resist an idea whose time has come. And I think the history of the PRI is a history of one idea, responsible investment, that has been embraced with extraordinary enthusiasm by the investment community. But it's also an idea that is evolving. And as we celebrate the PRI's 10th anniversary this year, it presents really an opportunity for us to reflect on how the idea of responsible investment has changed over the last decade, what's next for that idea, and for its continued embrace by the investment industry, particularly here in Asia. How we organize society, run our companies, and manage our investments change over time. Take attitudes to health and safety standards in industry. Today, strong health and safety standards with the policies and procedures to deliver them are considered a good indicator of management quality, leading to fewer disruptions in production, higher efficiency, lower legal risk, and higher employee satisfaction. And just like high standards in health and safety has become a way of doing business for the most successful manufacturing companies, high standards in the integration of environmental, social, and governance risk factors in decision-making will become a way of doing business for investors, not a nice-to-have add-on activity. So eventually, we will simply lose the R from RI. Responsible investing will just be investing. But this happy day will not deliver responsible investment nirvana. There are fundamental problems in the structure of modern capitalist societies that require investors to take a broader view of their role and work to address some of the systemic challenges we face. So as a starting point, it's useful to consider the relationship between the owners of companies and the managers of companies. The creation of the Dutch East India Company in 1602 is really an important milestone in economic history. So for the first time, we had a company with a separate legal personality, with limited liability, and shares that were freely tradable on a stock exchange. This greatly increased the ability of investors to spread and manage risks, and allowed investors to pool their resources in a way they hadn't been able to do before, and on a scale that had never been seen before. So finance textbooks, and if you did Finance 101, you would have learned that the only free lunch you get in the world, probably, is diversification. But in practice, it's not that simple, because diversification does come at a cost. The loss of control of your investment to company managers and a pooling of capital, of ownership with other providers of capital. So this raises profound questions over how investors holding small fractions of hundreds and thousands of companies might best monitor, incentivize, and control the managers of companies that they own without resorting to unproductive micromanagement. So finding this balance and struggling with this issue is something that investors have been doing since the Dutch East India Company was created over 400 years ago. And recent history is, of course, littered with examples of managers criminally seeking to enrich themselves at the expense of their shareholders. WorldCom and Enron are only the most high-profile examples. And the global financial crisis was also, among many other things, a manifestation of these principal agent problems. across the entire financial system, traders were incentivized to deliver short-term returns with little regard to the longer-term management of risks that accumulated in the system. So these problems, the principal agent problems, are structural. They will never go away, but they can and should be managed through high standards of corporate governance, as well as better dialogue among investors, to ensure that they're speaking as much as possible with a common voice on issues relating to effective stewardship of the companies in which they invest. Principal agent problems mean that the incentives of investment managers or other actors in the investment chain are not always properly aligned with the interests of asset owners and their beneficiaries. This can exacerbate short-term pressures, increase transaction costs for monitoring and oversight, and lead to incentives that are at odds with the goals of a sustainable financial system. So that is why the PRI continues to undertake pioneering work to support investors who sit at the top of the investment chain in particular. Our latest guidance, How Asset Owners Can Drive Responsible Investment, shows how owners can signal to their managers, service providers, and others through their beliefs, mandates, and contracts that sustainability is important to them and ensure that these agents are delivering in line with those expectations. We know that these signals are already permeating through the investment chain and driving measurable changes in investment practices. Today, the PRI is launching a new guide to ESG integration in listed equities. The first edition, published in 2013, is the most downloaded toolkit that PRI has ever produced, and our hope is that this latest edition will spark the next evolution in ESG integration in equity investment strategies. It contains over 50 case studies and examples of sell-side research developed with extensive input from many of our leading long-standing signatories. So if you need further evidence that investors take ESG issues seriously, then this guide is really the place to look. The relationship between investors and companies were very much at the front of mind for the expert group that helped draft the PRI's 6 principles. The principles call, for example, for signatories to be active corporate owners, to require ESG disclosure, and to incorporate this information into their investment processes. The introduction of sustainability reporting guidelines by the Singapore Exchange in June this year, prompting listed firms to disclose non-financial information on a comply or explain basis, will help in this regard, ensuring investors have access to a broader set of information needed to make informed decisions about the investment merits of Singaporean companies. It brings Singapore into line with other markets in the region, such as Hong Kong, India, South Korea, and Taiwan, which have already introduced their own requirements, and with the aims of the Sustainable Stock Exchange Initiative, of which the PRI, along with our UN partners, is a driving force. We can point to dramatic results in many of these areas. In 2007, in the PRI's first report on progress, around 40 asset owners disclosed that they were regularly engaging with investee companies. Last year, that figure had risen to almost 200. The PRI Clearinghouse, our platform for collaborative engagement, has organized engagement processes with more than 1,600 companies since its launch in 2006. So in terms of its organizational objectives, the PRI has, by and large, been extremely successful over its first 10 years. But a 10-year anniversary shouldn't just be about celebrating past achievements, as we discussed at the SGM, but also as an opportunity to chart the course for the PRI over the coming years. So throughout the year, we have been consulting with signatories as a part of a wider review of the PRI strategy that will help frame how the organization meets the aim of its mission to promote a sustainable financial system that promotes, supports long-term value creation for the decade to come. And We have discussed the blueprint, and Fiona will come back to that in one of the breakout sessions tomorrow. The global financial crisis raised profound questions about the role of investors in ensuring the health of the financial system. It's no longer sufficient that it's able to deliver short-term returns with little regard for the accumulation of longer-term risks. Here in Singapore, the Sovereign Wealth Fund GIC is a vocal proponent of long-term investing. They state that the organization's entire ecosystem must have a long-term mindset if it's to achieve its goal of contributing to the well-being of current as well as future generations of Singaporeans. From clients to employees, from front office to back office, and from internal investors to external managers, the fund tries to ensure that long-termism permeates its practices. GIC's views are timely. Sustainability is rising on the economic and political agenda more broadly across Asia, and investors need guidance, tools, and platforms to learn and to collaborate, which the PRI is well positioned to provide. It is natural for the PRI to turn its attention to Asia and to bring the industry together here this year. While Asia is underrepresented in our global signatory base relative to other regions, we believe that it holds incredible opportunities for responsible investment. Many of our signatories are already investing in Asia or are looking to increase their allocation to the region, thanks to its resilient economic growth, favorable demographics, and the strategic importance of China, which holds the G20 presidency this year in the area of green finance and climate action. These investors have a strong requirement for ESG integration as part of their mandates and realize that responsible investment will help to protect and build wealth in Asia's rapidly transforming economies. The G20's Green Finance Synthesis Report released last week identified the PRI as a global platform for capacity building that could be expanded to help the financial system mobilize private capital for green investment. We welcome the G20's endorsement. It is the first time a preeminent international institution such as this has endorsed our work and shows that the value of the PRI is being recognized by governments and policy makers at the highest level. Recognizing that Asia represents the next phase of growth for the PRI and many of our signatories, we opened our first regional office in Hong Kong earlier this year to provide a platform to share local knowledge and best practices, which is at the heart of what the PRI does. But we have been supporting investors, signatories investing in Asia on a number of fronts for several years. The investor working group on palm oil is one example. Palm oil, as you know, has several significant uses and benefits as compared to other vegetable oils, and has contributed significantly to economic development in a number of countries, in particular Indonesia and Malaysia. But however, as many of you will already know, the development of palm oil plantations has also been linked to significant negative social and environmental impacts, including widespread deforestation, increased greenhouse gas emissions, social conflicts, and damage to ecosystems. In recent days, a delegation of investors has seen firsthand the devastation that has been wrought on the environment and society in Indonesia, and a session on our agenda tomorrow will report back from this trip, outline the scale and nature of palm oil-related risks in Southeast Asia, and give insights into how investor engagement can address them. Building on our work at a global level to clarify the fiduciary duties in relation to the integration of ESG issues and investment practice and decision-making, in January this year, the PRI launched a 3-year project to clarify investors' obligations and duties in 6 markets in Asia: China, Hong Kong, India, Malaysia, Singapore, and South Korea. The first findings from this project will be released in our keynote tomorrow morning by David Blood. In line with what we have discovered in other markets, the report will show that there are compelling national interest reasons for policymakers to promote the incorporation of ESG factors into investment practice, and that doing so is consistent with the legal framework in all of the Asian markets we have studied. This report will help us begin important conversations with policymakers, investors, and stakeholders on the actions they can take to advance responsible investment across the region. The 20 pension funds, foundations, and other institutions that drafted the original 6 principles in 2006 were visionaries for their time and were clear in their aims. As UN Secretary General Kofi Annan said at their launch, the principles provide a framework for achieving better long-term investment returns and more sustainable markets. That objective is, I believe, the reason responsible investment has been embraced to the extent that it has over the decade since, and will increasingly be embraced by investors here in Asia, because it has been framed not as an ethical choice, but as a moral calling, but as its core as an investment issue. At the heart of the principles and underpinning the mission of the PRI is the view that taking appropriate account of environmental, social, and governance factors helps investors manage risk and generate higher returns for the long term. It's as simple as that. It is a proposition that is backed up by extensive academic research. And that, in turn, makes responsible investing a fiduciary responsibility. When you manage other people's money, you have an obligation to consider factors that are likely to have a material impact on the risks and returns over a longer term. That's why the PRI will continue to provide the tools and data asset owners need to drive responsible investment through the investment chain, through a market-based approach. The last 10 years have shown us that there is strength in numbers. The weight of our signatory base has enabled the PRI to become the global voice for responsible investment. It has provided the resources to create a global platform for learning, collaboration, and engagement. Our signatories also make us uniquely placed to work with others around the world who share a common vision, such as the Asian Corporate Governance Association and the G20 and ICGN at a global level. At this occasion, I'd like to take a moment to thank several signatories, in particular, BNP Paribas, Robeco, Bloomberg, and Amundi. Without generous support from them and our other partners, this year's conference would not be possible. And let me also thank Top 1000 Funds who provided this special edition to celebrate our 10-year anniversary, which is distributed to all of you. In another 10 years, I think many of the arguments we are making now about the relevance of ESG issues and responsible investment approaches to good investment practices will have been won. How we get from here to there will involve a lot of hard work, a lot of debate, some of which we can start here today. So, welcome again to the PRI in person. I hope you will find it useful and inspirational, and that you will go back to your institutions with new ideas and new energy. So I hope you'll have